Good morning, and it's a pleasure to be here in Norway, my second trip. I hope to double my vocabulary of Norwegian. Last time I came, I learned the word which was extremely useful, skål. So I hope to double it, and it'd be skål probably by the time I go. But it's really a great pleasure to be here, and I'm hoping that in the course of the next half an hour or so, I'll make some new friends, galvanize some people, infuriate some people as well. That is how you kind of make the world go around. And let's have a look at tax. Now, tax is basically the basis of a civilized society, without which we simply can't have any education, healthcare, security, law, policing, everything that we take for granted. So this kind of idea has been recognized a long time ago. In the US Revolution, in the American Revolution, they were objecting to taxation without representation, but now the world is turned upside down. We have representation without taxation. Corporations and the rich people are opting out of taxes, but they are essentially writing their own laws, subsidizing, funding political parties, controlling the media. So we're increasingly getting the whole world turned upside down, where there is now representation without taxation. But the irony is, corporations themselves can't really flourish unless there is a social infrastructure. But what they are seeking is really a free ride, and that free ride is simply not possible. We should not really permit it. Now, it is difficult to know how much tax revenue is exactly lost each year due to a whole variety of techniques which are used by accountants, lawyers, financial experts, and corporations. There are various models which estimate that number. The number for the phrase is often used, a tax gap, which has three components. It is tax avoidance, it is tax evasion. The difference between tax avoidance and tax evasion is the thickness of a prison wall rather than anything else. That is the difference between tax avoidance and tax evasion. And the third element is tax not yet collected for a whole variety of reasons, tax arrears. In the UK over the last couple of days there's been a debate about the taxes owed by Google, and they have settled with the UK government with a rate of about 2.7%. And well, I'm sure many other people wish they could get that. They're paying about 130 million instead of 1.8 billion. That is the power of political connections and political lobbying. But altogether, European Union may be losing about $1 trillion. UK anything between 35 and 150 billion. Americans anything up to $500 million. Developing countries hit hardest of all, maybe up to $500 billion each year. And the maximum overseas aid in any given year so far has been $120 billion. Of course, these are estimates based on models. If you wish to refine them, especially if you're involved in the tax avoidance industry and want to tell us how much you're helping someone, that'd be really gratefully appreciated in the course of this morning's and this afternoon's debate. So we really have new masters of the universe. I sometimes call them the pinstripe mafia. Unlike the mafia of the old, they don't go around shooting people in their kneecaps or burning their house down, but this new mafia is really made up of accountants, lawyers, and financial experts. They are basically dipping their hands into the public purse. They are preventing the state from collecting the revenues which are due, and they really kind of engage in a double speak. You go to their websites, they will tell you how ethical they are, but actually that is not what they are doing. They are being unethical, whether it is paying low wages or avoiding taxes or not following the proper health and safety procedures for their workers and consumers. They talk about social responsibilities, but if you look on their website, not one of them will tell you what kind of antisocial practices they've been engaged with, whether it is banks fixing interest rates or laundering money or tax avoidance or evasion. None of that will be on their website at all, not even in their annual report. reports. So there is a kind of a parallel world they have created, which somehow does not acknowledge what we actually read about in the newspapers and experience. They talk about serving the public interest, but whose interest is public interest? Essentially, a lot of exploitation going on. Expert knowledge is increasingly being used to undermine democratic choices. We are told there is no other way. We simply must concede to corporations. Corporations will simply run away if we force them to pay taxes. Well, where will they go? Will they end up in Yemen or Somalia or somewhere, or what? Or do they not rely on a use of social infrastructure in order to generate wealth? They do want an educated workforce. They want a workforce which has healthcare. They want a good transport system. They want a good legal system. All this has to be paid for. But simply a lot of organizations are seeking a free ride. And the big problem we have is, in the bottom line, that corporations are trying to increase profits. And the profits can be increased simply by avoiding taxes. A lot of executive remuneration is linked to profits. So more taxes they avoid. Stock markets celebrate. Stock markets don't look at what the social consequences are. A lot of people are enriching themselves simply by having performance-related pay. So people are, if somebody is intoxicated with alcohol, with a bit of luck, next morning they would be sober. But when we have a social system where people are intoxicated with wealth, power, and status, I'm afraid there is no pill, no easy cure, except for us to call these people to account. That is what we have to do. But this is what's really been going on. So, EU Tax Committee, to which I also gave evidence, basically points the finger at large accounting firms, and it tells us that these are behind lots of tax avoidance schemes. So within major accounting firms, they have a tax division which is a profit center. There are set targets. If you meet the targets, you get salary increments, you get promoted, you get rewarded. And of course, businesses need help in order to comply with technical aspects of tax. But when you set somebody a target, you're inviting them to meet those kind of targets by selling dubious schemes. And that is what exactly is happening. I'm aware of young graduates being sent on courses in Big Four accounting firms, being taught how you create a tax avoidance scheme. This is financial engineering. Real engineering is dead. Financial engineering is thriving. Business schools are churning out hundreds and thousands of graduates who will make a career in financial engineering rather than doing anything really productive. Is that the kind of world we want to live in? It is for all of us to debate and decide. So here is the US Senate Committee. This is a quote from the US Senate Committee investigations telling us how accountancy firms are now involved in the tax avoidance trade. They are saying basically these firms have moved from providing one-to-one tax advice. They basically advise and sell. People are trained. They are trained in techniques of cold calling. You simply phone up somebody and say, well, we have former tax authority personnel working for us, and they tell us that this scheme is okay, you should buy it. And if you don't buy it, a week later they will phone you again and say, by the way, government is planning a new law which will prevent this scheme. You better buy it today. Okay, I'll tell you what, if you're still reluctant to buy it, we will sell it to you, and if there is any lawsuit, we will pay part of the costs as well. It's a bit like having a winter sale on your coats and any other suits. Quick, get a discount before the sale finishes. So they're actually trained in psychological techniques for selling. Okay, and this is all based on actual records which are publicly available from the US Senate investigations. Again, in the UK, parliamentary speeches given by members of parliament who ran big companies. So they're speaking with experience, and they're saying it is bankers, lawyers, and accountants who are behind lots and lots of tax avoidance schemes. And that is where we should be focusing our attention. We should not be disarmed with claims that accountants and lawyers and that these people are professional, and therefore we should not ask any questions of them. I am sure a vast majority of accountants, lawyers, and financial experts are ethical and good, but there are too many who are at the borders, and we should really be concerned about them. So big accountancy firms have a vast amount of income. This is their global income of about $125 billion. They are the world's 54th, 55th, now 58th largest economy. Gives them plenty of resources to fund political parties, individual politicians, influence media. So in the UK, we have a very big newspaper called the Daily Telegraph. It refused to run stories about HSBC, which was accused of facilitating tax evasion and money laundering. Reason, HSB provides a lot of advertising revenue. In the UK, we have accountancy magazines, which are owned by professional bodies. They will very rarely run a critical story on the world of accounting because it is not in their interests. So who exactly is going to be investigating these things in the future if major newspapers are capitulating? And there is a lot to be said for investigative journalism, but that itself is under threat. So this is the power of what we are looking at. In the UK, the tax authority, Her Majesty's Revenue and Customs, some years ago conducted an internal study which leaked out, and it said almost half of all known tax avoidance schemes were designed by the big four accounting firms behind a wall of secrecy. And there was a government audit, National Audit Office, which said that the tax authorities are looking at some 41,000 tax avoidance schemes. There is simply no judicial capacity in any country to hear all these cases. And eventually, after a decade or so, somebody will meet in a bar or on a lunch table, shake hands and say, okay, let's do a deal. We haven't got the resources to go after you. Can you give us some money, please? At that point, that whatever is agreed becomes a legal precedence, and others can use it too. So that is the state of affairs. About 30,000 tax cases waiting to be heard in the UK alone. They will never be heard. Simply, we haven't got enough courts and judges. And on average, a court case takes about 10 years to be resolved. So you can think about the huge burden on public purse. And 30 to 40% of each year's financial legislation plugs the so-called loopholes. And here is a quote which would interest you. This is from the UK House of Commons Public Accounts Committee, which investigated the role of Big Four accounting firms. Just before the hearing, a former PWC partner, PricewaterhouseCoopers partner, met the chairperson and provided information about what goes on within the firm. Basically, PricewaterhouseCoopers, according to this, will sell a tax avoidance scheme if there is only 25% chance that it can withstand a legal challenge. In other words, they know that there is a 75% probability that what they are doing may be declared unlawful, but they will do it. Because there's money to be made. You have to hit your profit target. You have to hit your revenue target. Other accountancy firms owned up to having a 50% threshold. My question to you is, what if people who run buses, trams, trains, who provide food, water, medicine, said, yeah, there's a 75% chance what we are doing is unlawful and harmful, but let's do it because nobody's really got the resources to catch up with this? Where would we be? These are the standards of the firms who are actually allowed to audit some of the biggest companies on this planet. Can we really even have any confidence in that? So accountancy firms have a close relationship with corporations and tax havens. Deloitte, for example, been advising people on how to invest in Africa via tax havens so that taxes can be avoided in poor countries. PricewaterhouseCoopers is advising Jamaica on how to become a tax haven, not becoming a haven for freedom or information, no, just for tax haven. There are many kinds of havens we can have, but these are the havens that are being aimed for. I investigated and published, if anyone wants to see it, how Pricewaterhouse and Ernst & Young wrote legislation for the island of Jersey, which was then used to squeeze concessions from other governments. So some small islands allowed these people to write their own laws and just put them in front of ministers and parliament, say, sign here. This is in your interest. You will be rich. Not that rich. So PricewaterhouseCoopers has a close relationship with the island tax regime, and they indeed were the initial designers of what subsequently became known as the Irish double Dutch sandwich. That is a kind of a phrase used in the world of tax, an illustration coming up in a moment if you're that interested, and it is used by lots of major companies. So this is the kind of a diagram. Now, you can imagine somebody has to know the international tax systems, how to play one system off against another, okay? The details are on the slides. If you like, if you want to have copies, you can drop me an email or drop the organizers an email, and I'm sure they will send it to you. So essentially, it is creating lots of strange corporate structures, complex transactions, simply with a view to shifting profits. And earlier we heard about the OECD and the BEPS project. It does not adequately deal with this, and I'll come back to that later on. So this is essentially that. And this is again another scheme designed by PricewaterhouseCoopers. The document got leaked, and this is again playing off structures in the UK, Jersey, Delaware, Luxembourg, simply as a way of shuffling profits, transferring them from one jurisdiction to another. Can we stop this? Of course we can stop this if we have a political will, and I'll be coming up with some comments and suggestions on that later on. So in the United States, they did investigate the big four accounting firms. All of them were found to sell products which appear to be illegal. They call them products. Now, because we use the word tax avoidance a lot, there is a new phrase used by accountancy firms. They call it now financial restructuring plans. They don't call it tax avoidance anymore because it's got a lot of negative currency. So again, that is what they're doing. So some examples. So KPMG had an inventory of 500 tax avoidance schemes, which by law they should have registered with the US tax authorities. They did not, deliberately did not. That decision was made in writing at the top level because they felt the authorities would never catch up with them. And besides, they said that would put us at a competitive disadvantage, that we might not be able to sell all these products as a result. So they did not. A whistleblower, an employee initially blew the whistle, and the Senate committee investigated. The firm eventually admit its own words that they said they committed criminal wrongdoing, paid $456 million fine, and basically were put on probation. Some partners and employees sent to prison. Did it really dent the company's appetite for higher profit through selling tax avoidance schemes? Maybe, but not much, because they're still at it. So they are addicted. It's part of the business model. But that is what you do, so they remain addicted to that. Look at the accounts of any company, General Electric, Citigroup, all audited by KPMG. KPMG are also their tax advisors. Do these companies tell you how they manage to avoid tax? Not really. Yet those accounts always get a clean bill of health. Most company accounts, I can tell you as an accountant, are not worth the paper they are written on. I had to sit down on Friday about midnight and try to make sense of this deal between Google and the UK government, and I went through tons and tons of information. Could I find out what exactly Google's profits are in the UK? No way. Could I even find out what their sales are in the UK? With great difficulty. I had to compute alternative numbers. There are ways of doing it, okay? And had to put them out into the public domain. So why? We spend a great amount of social resource on production of these company accounts, but they are of very little information. KPMG has a history of creating novel assets for their client. A good example was WorldCom, where they created an asset called Management Foresight. What is Management Foresight? It's a bit like you on a mobile phone. You can have a mobile phone with 500 megabyte data allowance or 200 megabyte data allowance and 500 minute calls and anything else. That's called Management Foresight. Okay, management are really foresightful that they met the consumer's needs. Now the thing is, then you say that is what they are selling, Management Foresight, and whenever they sell it, it has to have a WorldCom or any other company's logo on it. You create another company in a tax haven where you register the Management Foresight and the logo, and you charge everybody rent to use it. So you can charge the Norwegian subsidiary a rent, and the rent is paid to a company in Cayman where it is tax-free, because they have no corporate taxes. It's that kind of arrangement they created. And some $20 billion of income was siphoned off. From some countries, the rent was 80% of the sales revenue. And it's all siphoned off, okay? So this is a UK court case. KPMG had no prior relationship with the company, and they simply knocked on the door and said, hey, we can help you. Would you like to hear about it? They said, yes, please. They said, why do you pay yourself a salary? Because salary is cash, cash is taxable. Why don't you pay yourself in your customers' debts? Company can assign the debts to you, because that is not strictly speaking cash, and you will escape income tax. Now, can you imagine grown-up, educated people sitting around the table? What do we do today to rob the public purse? Somebody can rob a bank, they get caught, but what do we do that is more novel? What can we sell? Of course, the scheme was declared unlawful. Okay? The judge said, no, this is still cash equivalent. Somebody still has to turn the whole thing into cash. Not allowed. Okay? Another, this is avoidance of the sales tax, value-added tax, basically playing around with how you charge VAT on the demonstrator cars. Okay? Are they second-hand or are they new? So it is, again, internal kind of games being played. No tax is safe. Okay? No tax is safe. And the judge said the KPMG scheme was simply an abuse of law. Very strong condemnation. So were KPMG investigated by the UK government? No. Were they fined? No. Has any professional accountancy body in the UK ever disciplined any big accounting firm for selling tax avoidance schemes which are abusive? No. Not since 1880. That is when the professional bodies appeared. Not one case. Okay? When challenged, oh, well, you know, they say, well, this is from the past. Well, sorry, we can only refer to what the judges say. We can't refer to anything else. Okay? So US KPMG collaborated with Barclays Bank to sell a tax avoidance scheme that through a whole series of paper transactions which have no economic substance, they could generate a tax credit, a tax assumed to be paid, not actually paid, assumed to be paid, and this would then make the US taxes vanish. The judge said this was an abusive tax avoidance scheme, no economic activity. Those who were involved in this and other transactions were nothing short of reprehensible. You can't get any stronger condemnation. So what did we do in the UK? The current chairman of the UK Tax Authority is a former KPMG partner. You can draw your own conclusions. Okay? So we do know how to honor people. Okay, so more recently another version of the same relating to Wells Fargo. So they're still trying to sell different versions of it. Okay? McLaren paid a fine. So if you pay a fine, that means you've done something wrong. Is that a tax-deductible expense? So KPMG went to the court to say it is a tax-deductible expense. The judge said, no, the activities which gave rise to the penalty were not carried out in the ordinary course of trade. Sorry, folks. But of course, you can still make money. Even if you lose the case, you get your fees. You can't lose, can you? Okay, so Ernst & Young, a whole history of tax avoidance. My favorite one is where they designed a scheme for company directors to be paid in gold bars, fine wine and platinum sponge, so that they could avoid social security payments because it is not cash. The government plugged that, and next day they designed another scheme, paying people through offshore trusts. So it is a game, a deadly game, with serious consequences for public finances being played. And this is a more recent one I wrote about. Newspapers, you know, have their name on top and logo. So some companies making a lot of money, and the employees are saying, you're very profitable. Why don't you give us a higher salary? The company says, company went to Ernst & Young, who are also its auditors. They said, we like to make more profit, but we don't want to show more profit. How do we do this? Ernst & Young said, good idea. Tell you what we do, we will treat the newspaper masthead, that is the name on top and the logo, as a new asset. And we will transfer this to a company for £1. And then that company will lease it back to all the subsidiaries who print the newspapers for a royalty. So the royalties of £51 million were paid, which mean all the subsidiaries then declared a lower profit. And then they went to the tax authorities and said, we have incurred a cost of 51 million royalty payments. That reduces our taxable profit. Well, who have you actually paid it to? Oh, paid it to another company in the same group. So has any cash left the group? No. So where's your cost? So it was declared to be unlawful. And what is interesting is Ernst & Young, the court documents suggested that Ernst & Young had told the management that by following this practice, the transparency of the published accounts would be impaired, would be reduced, would be significantly impaired. Auditors telling this to the company, that if you do this, accounts would be less readable. People won't know a lot. What? So we allow these people to do this. This is again a value added tax. They give them very interesting names that some I can't put up. I'm a very modest guy. But this one they call Pitta, pain in the arse, and that was a working kind of a name for this. The idea was to again exploit legislation and to make money for the clients. So Ernst & Young in 2013 paid $123 million fine in the US for facilitating tax evasion. Some people sent on to prison as well, which costs the taxpayer as well, so even then we don't get away from it. But they're still busy crafting tax avoidance schemes for everybody else. So I'm running out of time. So PricewaterhouseCoopers have also been doing a similar kind of thing. Here they mass marketed a scheme, and basically judge said whole scheme is a fiction. So remember, we don't know what else is settled behind the scenes. Tax authorities don't have enough resources to go after all the cases. So we're only looking at probably the tip of an iceberg. PricewaterhouseCoopers designed schemes which came out, what became known as Luxembourg leaks, lots of big schemes for lots of big companies. UK just abandoned its investigation. Oh, well, it's all about the past. Well, it can hardly be about the future. We can only know about the past. 28,000 pages. I looked at them for a lot of journalists. I was keen to see if anybody ever mentioned what the consequences of adopting these schemes would be for society at large. None. Not one line, not one sentence, nothing. It's simply a case of what you can do. So, again, okay? So no UK investigation of any kind. So let me just sort of skip through. You can guess what the other big accounting firms have also been up to. Bankers have brought the Western economies to their knees. Deloitte's designed a scheme so that bankers then have to pay income tax on their bonuses. The court said illegal scheme, okay? The scheme, the judge said, and each aspect of it was created and coordinated purely for tax avoidance purposes. No substance whatsoever, all thrown out. So So bending the rules to make profit at almost any cost has now become a competitive necessity. That has become the mantra. Big firms, big corporations do not fear bending the law anymore. It is something they think they should be proud of. It is something they excel at, okay? Because they've got to hit the profit targets, increase executive remuneration. That is really the key driver, okay? And the governments have basically been just transferring the tax responsibility onto others, or simply taking away hard-won social rights from the people. That is what they have been doing. So in the US, some fines, nothing has changed. UK does nothing. Indeed, big firms now run the tax authority, and they write lots of legislation. And I can give you more details later on. So we heard earlier on about the OECD BEPS scheme. It mainly relates to corporations, doesn't do anything about income tax, value-added tax avoidance, and many other kind of tax avoidance schemes. It deals with some things. It can possibly restrict tax relief on interest payments, but what it can't do is address the fault lines of transfer pricing. So the current global corporate tax system, designed in early 20th century, last major treaty, 1928, negotiated by the League of Nations, it says that each legal entity is a taxpayer. So if Google has 500 subsidiaries, you have 500 taxpayers. That is a recipe to play the international tax system. No, we need to adopt what OECD has rejected. It is called unitary taxation, which means we recognize that Google is a coordinated, unified global entity. There is only one Google. All internal transfers don't matter. They're simply playing the game. So we've got to take Google as one entity. Then we've got to learn to allocate its profits to each country of its trade, and the governments can tax it any way they like. But that is something completely ruled out by OECD. So OECD is not addressing the fault lines of the current corporate tax system. Previous speaker referred to transfer pricing. Transfer pricing relies on the availability of independent arm's length prices. You can't get them. About a dozen producers control 2/3 of the world pharmaceutical trade. 20 companies control the world's coffee trade. About a dozen players control all the world's seeds. Where do you get these independent prices in the markets anymore, in a world of global monopolies? You can't get them. That system is broken. OECD is simply patching it up. It is not really reforming it. EU Tax Committee has prepared a report. We will wait and see. EU offers us some hope. The Common Consolidated Corporate Tax Base, which is a version of the unitary taxation system, possibly offers us a way forward, because that would automatically negate all internal transfers within multinationals. So that is the kind of future. What else? Well, again, we can talk about it later on. I like to see public availability of all corporate tax returns. Want to see public availability of country-by-country report, not the OECD version, which simply says, make it available to tax authorities. We should all be able to see this. No public contracts or any tax avoider. Why should we give them any contracts funded by taxpayers? Fine company directors personally for tax avoidance. Let them know there are personal consequences. They can't just game the system to improve their executive remuneration. Same for accountancy firms. We need more test cases and prosecutions as well. And I'll be able to take the questions later on. Okay, thank you.